Hello, how do you do swing trading daily chart analysis of large cap stocks, upward large cap stocks, if you are using long option long swing trading strategy? You use daily chart to do your swing trading chart analysis, either maximum daily chart or 1 year daily chart. We are going to use maximum daily chart so that the support lines that we trace or the option lines that we trace that are low, that the stock didn't touch base with, the chart didn't touch base with within 1 year time frame, we can still see them. Otherwise, within 1 year time frame, we may not see those. And those support lines or trend lines are our entry points. You can cannot see on 1 year daily chart. Let's go to maximum daily chart. The first one we are going to analyze is ECL. We are going to analyze 3 stocks on our watch list, and it's good to have a watch list of stocks that you analyze on a daily basis after the market open, so that you can see how they perform during the day while the market was. You analyze them after the markets close to see how they perform during the day while the market was open. ECL, this support line or trend line, is the line we like to buy at, but right now the price is right up. So when you are doing your chart analysis, you compare where the price is to where you want to buy the stock. And right now it is March 9, 2025. The market closed on Friday, March 7, 2025. And Friday, the price went up. That's why we have a green bar, and the closing price was highlighted in green. That just means the price at the end of the day was higher than the price in the morning when the market opened. And this green bar follow a pullback, which is a red bar, and a red bar means the price at the end of the day was lower than the morning price when the market opened. But nonetheless, the price is still higher, far up compared to where we want to buy. We'll just keep observing it. It seems like it's been following a short trend line. When I'm comparing this low, I'm connecting this low to this low, or since the green is further lower than this one, I just went with it. But this low and this low, to see how far I can get toward the y-axis and closer to the current price, those two connected took me there. So it could be following that trend line right now and still far from where we like to buy. It reached a new high a few days ago. The next one we are going to analyze is EQIX. EQIX, Friday the price went down, so we can see a red bar, but is going down. So you can see it's making lower lows. Like this low is lower than this one, which is about the same as this one, which is lower than this one, which is higher than this one, higher than this one, higher than this one. But if you want to connect them from pretty much where this trend is ending, this trend that I have here ended when the price went below it, you'll be tracing a downward support line, therefore is going down. Alternatively, if you want to trace resistance, you'll be tracing it downward because it's making higher, it's making lower highs. This is lower than this one, which is lower than this one, which is lower than this one, so it's going down, but it's still far from where we like to buy. At this point, we can just extend our trend lines. That will become our entry point if the price touch base with those trend lines and decided to rest there and continue up from there. You keep an eye on where it touch base with a support, a pullback, and when you are tracing, so you don't move it away from it. So we like to buy the stock at either one of those trend lines, and right now it seems like this could be the fast side wall of the mountain, because it does make a wide mountain, and within that it will have a shorter trend line, which it seems to be repeating this pattern here. So we don't know if it's done with this trend line, if it's done making a peak. So if it's done, maybe when it reaches this, it will continue going down to touch base with the trend line here before going up. It has been on the upside for 2 years. Last time it touched base with this trend line has been 2 years, so maybe it's done, and here we are seeing about the same as well, and it took about more than 6 months to touch base with the trend line when it was done with the peak, with the previous, with this mountain here. So it took about two years to make to climb the mountain to the peak. We don't know how long it's going to take for that to come back down, but we prefer to buy at this trend line because we are not sure if it's done climbing up, but we'll just keep observing it. The last one we'll analyze is in this video is FAST, and FAST we purchased it, we have not sold it yet. We purchased it in 2024. We traded in 2024, swing trading in 2024 using short option and swing trading strategy, and we purchased it at some point and the price went down, so we have not sold it yet. And Friday the price went up, but next time we will buy will be on this trend line. But you see, we purchased it. The arrows at the bottom of the chart shows where we bought it. We bought it there, we sold it there. I'm not sure if we bought it here, didn't sell it and bought it there. Oh, I think we sold it. Let's see if I'll be able to move that arrow out of there. Is because of that high, that new high is right on top of it. Maybe changing the color could work as well, but we bought it and sold a few days later. But then we bought it again, and in fact it went up a little bit, but we didn't sell it and it pulled back, and now start going up. It didn't really touch base with the trend line, the bottom, and it start going up. So we are just going to keep observing it to see if it's going to reach a new high from where it is for us to make a profit in it before we sell it. So this concludes how you can analyze your chart for swing trading. We didn't find anything in it that Monday we will buy out of the 3 that we analyzed, and all 3 the price is far from where we'll want to buy, and this one we already bought it and it's negative in our account. Therefore we'll prefer to wait until it's positive for us to sell it. And since we already bought it, we'll just compare where the price is to where we'll want to exit, which is going to be after a new high is reached. So the new high will be higher than this level for us to make some profit in it. So when you are using a long up to long swing trading strategy, it'll be good to handpick upward stocks to form your watch list of stocks, because I feel like they react well with that. And you trace your support lines or uptrend lines, connecting the obvious lows that you can see on the chart, starting with maximum monthly chart and then move to maximum daily chart and trace your long uptrend line that cross multiple years, at least 1 year frame. You can see that this one is more than 1 year time frame, this line. And then you choose the one that you saw the chart touch base with more than once to be your entry point. If you feel like it's going to the chart is most likely come pull back at some point to touch base with that trend line. And on a daily basis, you just analyze the chart to compare where the price is to where you want to buy. And when it's close to that trend line, you pay close attention to it to see if it's done making lower lows and start making higher lows, where one low is higher than the previous one and so forth. And once you start having that higher lows, after 2 or so, you can buy at the first or second green bar that follow a pullback. For instance, let's say this is the trend line you like to buy at. You can see that this low is higher than this one, which is higher than this one, which is higher than this one. So technically you have a short trend line there, but going this way where it tend to move, change direction, we have this low there that is higher than this one, and we have this low that is higher than this one, and so forth. So we trace an uptrend line here. So assuming you are watching it and you have an uptrend line like this, you can buy at the first or second green bar that follow a pullback. But we are not going to buy at the short trend line. We like to buy at the long uptrend line. But you look for the same scenario around the trend line, either above it or below it, but around it, and you'll get in. And once you bought it, you will continue to analyze the chart on a daily basis, comparing where you bought it, where the price is to your exit point. With upward large cap stocks, you can target the next new high to be your exit point, or 5% or 10% return, whichever you are comfortable with. Just make sure you lock in some profit. You don't stay in the trade too long until you lose all the profit when they start going down again. But you want to lock in some profit. It's not about maximizing the profit. It's not about being the best at swing trading. It's about locking in some profit. By swing trading stocks that you could have invested in long term otherwise, and if you invest in long term, it will grow steadily along this uptrend line. But by swing trading it, you will be cash flowing these stocks that you could have invested in long term. You will cash flowing those fluctuations away from the trend line to lock them in instead of letting them go. And For instance, if you bought it there and you sold it somewhere there, you'll have locked in that profit instead of buying it and staying all the way here, for instance. But again, keep in mind that the price is somewhere here though, so it goes up and it pull back to the trend line. So depending on where you sold it, well, if you sold it if you need the money when it's touching base with the trend line, depending on when you bought it, you'll still make profit because the trend line is upward. But it depends on the stocks that you invest in long term. If that's a stock that makes those type of huge mountain, you'll be letting go those fluctuations. And when you swing trade it, those profit you lock in, your cash flow will offset the higher price you pay when you pull back to the trend line and you buy it again, because you'll be buying it at a higher price compared to the previous purchase on the trend line, on the same trend line. But that is what long up to long swing trading strategy is about. And when you buy at the trend line, you'll accumulate quite a bit of profit if you are waiting to exit at the new high. As a beginner swing trader, you can start swing trading large cap stocks because they don't fluctuate much, giving you time to practice the strategy you are using and to master the strategy. And after that, you can try different type of market capitalizations as well, to have large cap stock watch list, mid cap stock watch list, small cap stock watch list. We have time to analyze them on a daily basis to swing trade from them. But yeah, thank you so much for your time. We thank you very much for watching our videos. We thank you very much for all your comments, and we thank you very much all that subscribe to our channel. I'm Afiavi Liberman, creator of Liberman Consulting L.L.C YouTube channel, and in asoap.com, our blog. On our channel and on our blog, we share different ways you can save money and different ways you can make money to reach your financial independence, where you do not depend on an employer to provide for your family. And swing trading is one way to make money. Just that small, one share at a time. Even with this long up to long swing trading strategy, you can make a good amount of profit. Even if you buy one share, you purchase one share and you sell it there. Around here, for this particular stocks, is even less than $100 a share. You buy one share at $61.59. When I put my mouse here, it will show you the price at $61.46. And you sold it there for what, $84.75. So about $20 profit a share. So you spend $61, you made $20 on it. And this one was in June 2024, and this one is November 2024. So that time frame is where you'll have stay in the trade and make that profit. You can do the calculation 20 divided by 61 to see the return on that. So if we just say 20 divided by 61 times 100, that's 32%. That profit divided by how much you pay for the share to make that profit. So just start small so that you can practice a strategy, either $300 per trade or $100 per trade. If the $100 is enough to buy one share of stock, is enough to meet the requirement of the brokerage firm to open a brokerage account or a Roth IRA if you have a job, and that $100 will be enough to start swing trading one share at a time. And if you buy and the stock, the price goes down, you just keep that money there in that stocks, keep observing it and keep saving money to put in the account to buy another stocks. And when that stock that went down become positive in your account, the price goes up, it becomes positive, you sell it for a profit, and you learn from that trade to see where you bought it, to see what you have done differently. You don't need to sell it at a loss. If you handpick stocks carefully, and there are stocks you could have invest in long term, you don't need to sell them at a loss if they turn around and go down in price. You just keep them until they become positive and you sell it. And this is an example one. We bought it in November 14 and we have not sold it yet, and today is March 9, 2025. So you can see how long we have been in the trade. And we bought it before and sold it, a few times in 2024, and we bought it again and the price went down and we just kept it there. But yeah, just if you are not going to sell it at a loss, carefully pick your stocks. For more tips on how you can create your own stock watch list to swing trade, will you please check the description of this video for the playlist links. We have one for watch list and we have others for swing trading related videos. And an example of content you'll find in some of those playlists. Some of those videos are published already and some are not yet. And we have watch list series that we are publishing. When we are done with that, we have another series that will start as well, just to show you the whole process on when you find the stocks, how you will analyze it to see if it's worth adding to your watch list. That's how you handpick stocks to create your watch list of stocks. Have a long list and then pick out of it to form your watch list for the year. Enough number of stocks that you can analyze within an hour on a daily basis, and during the year you can flag the one that didn't react well to the strategy you are using, and at the end of the year you can take them out of your watch list and go back to your master list and pull the one you didn't trade to replace them and give them a try during the new year, until over time you'll have a watch list that you are comfortable with, and that's the list you just swing trade from. You take your time to create a watch list, and that becomes your stocks library that you analyze and swing trade from. Some days you might find a lot of things to purchase, some days you may not find any, and some days you might have a lot of profit in your portfolio that you will sell stocks to lock in those profits and exits, and some days you won't sell anything. But little by little you will increase your account by adding more money to it, by locking in your profit from swing trading, and over time your profit will continue to grow to the point that they will surpass how much you are making from your full-time job. As employees, we need to start learning to earn money outside of our job. We cannot rely on our job 100% to provide for all our needs and wants. We need to start learning different ways to make money outside of our job, so that we are not dependent on our employers for our basic need, our children's need, our spouse need, our household's need. Thank you. Do you swing trade? Which strategy do you use? Will you please share your experience with us in the comment section? Thank you.